Most people think that when they put money in a bank, it just sits there quietly waiting for them to come back and withdraw it whenever they need it. They imagine their money resting peacefully in a digital vault, doing absolutely nothing. But before we go any further, let me ask you something, and I want you to actually answer this in the comments honestly without overthinking it. When you deposit money into your bank account, do you believe the bank is simply keeping it safe for you? Or do you believe the bank is actively using that money to make more money right now while you go on with your life? Take a moment, think about it properly, and drop your answer in the comments before continuing. Most people believe their money is resting once it is inside the bank, but here is the uncomfortable truth. Your money is not resting at all. It is working every single day, just not for you. Welcome to Precision Net, where we break down money topics in simple real-life language, so you actually understand how money works in the real world instead of guessing or hoping for the best. Today we're talking about something most people never question until they're older, frustrated, and confused about why saving alone never seemed to move them forward financially. Think about your everyday life for a second. You wake up early, maybe before the sun comes up. You prepare yourself, you commute, you deal with traffic pressure, stress, deadlines, supervisors, customers, or clients. You give away hours of your life every single day in exchange for money. When that money finally reaches your account at the end of the month, you feel relief. You feel like your effort has paid off. You feel responsible when you decide not to spend all of it and instead save some of it in the bank. Society tells you saving is smart saving, is disciplined saving, is maturity. But very few people ever stop to ask what actually happens after the money enters the bank. Let's make this very simple and very real. Imagine you deposit 10,000 shillings into your savings account. You get a message from the bank confirming the deposit. You might even feel proud of yourself. In your mind, that money is yours untouched, waiting patiently for your future needs. But the bank does not separate your money and keep it aside just for you. They do not label it with your name and store it away. The moment your money enters the bank, it becomes part of a large pool of money. That pool is then used to lend money to other people and businesses. Your 10,000 shillings might be combined with millions from other savers and then loaned out. It could help someone buy a car. It could help a business expand. It could help someone pay rent or school fees using credit. The important thing to understand is that the bank is earning interest from lending that money. Now, let's talk about interest in very plain terms. When you save money, the bank promises to pay you interest. Usually this interest is small, maybe 3%, 4%, 5% if you're lucky. When the bank lends money, they charge much higher interest. Sometimes 15%, sometimes 20%, sometimes even more depending on the type of loan. That gap between what they pay you and what they earn from lending is profit. Pause here and really think about this system. The same money earns two very different outcomes depending on who controls it. When you save, it earns slowly. When the bank lends, it earns quickly. This is not accidental. This is how the system is designed. Here is another question for you, and I want you to answer this one honestly in the comments as well. If your money is earning 5% for you, but earning 20% for the bank, who do you think is benefiting more from your savings? You or the bank? Let's bring this even closer to real life. Think about how aggressively banks push loans. You see advertisements everywhere. Personal loans, mobile loans, instant credit, overdrafts, credit cards. They make borrowing feel easy, fast, and normal. Why do you think banks love lending so much? Because lending is where their real income comes from. Interest is their engine. Now ask yourself this. Where does the money for those loans come from? It comes from deposits. It comes from people like you who are saving money, believing it is just sitting there safely. Without savers, banks would have very little money to lend. That means every time you save, you are indirectly fueling the loan system. Again, this does not mean saving is bad. It means saving has a role. The problem begins when people believe saving alone is enough to grow wealth. Let's talk about inflation because this is where many people get confused. Inflation simply means prices increase over time. Things become more expensive. Rent, food, fuel, transport, school fees, everything slowly costs more. If your money is not growing faster than inflation, you're not actually progressing. For example, imagine inflation is 10% in a year. That means something that cost 1,000 shillings last year might cost 1,100 or 1,200 this year. If your bank pays you 5% interest, your money increased on paper but lost value in real life. You are poorer in terms of purchasing power. Banks understand inflation very well. That is why they adjust loan interest rates quickly. They protect themselves. They make sure they are always ahead. Savers are usually the last to benefit. Banks also use your money in other ways beyond loans. They invest in government bonds, treasury bills, and other financial instruments that generate steady returns. These investments are considered low risk and reliable. Again, your savings help make these investments possible. The bank earns consistent income while you earn a fraction of it. Think about it like this. You give someone your motorbike. They use it every day to make deliveries and earn money. At the end of the month, they give you a small token and thank you. You provided the asset, they used it to generate income. That is how savings accounts work. Now, some people say at least my money is safe. And that is true. Banks offer safety, convenience, and liquidity. You can access your money quickly. You can pay bills, transfer funds, and store value securely. That service is important. But safety does not equal growth. This is where many people get stuck for years. They believe saving equals progress. They believe if they are saving something, they're doing well. But saving is only the foundation. It is not the destination. Here is another important question for you. If you save consistently for years, but your money grows slower than inflation, are you actually moving forward financially, or are you standing still while time passes? Drop your thoughts in the comments. Banks understand money at a deep level. They understand time, risk, leverage, and compounding. That is why they never allow money to stay idle. Every shilling has a job. The difference is they choose jobs that benefit them. This video is not saying banks are evil. Banks are businesses. Their goal is profit. That is normal. The issue is that most people were never taught how the system works. They were only told to save, work hard, and be patient. Financially educated people use banks differently. They keep emergency funds in the bank for safety and access, but they do not rely on savings accounts to build wealth. They make sure most of their money is working in ways that beat inflation. Think about wealthy individuals and companies. They use banks every day, but their wealth does not sit in savings accounts. It grows through assets, investments, and systems. They understand the rules. Imagine if you were taught this early. Imagine if someone explained that saving is step one, not the final step. Imagine if you learned that money needs a job and not all jobs pay the same. Many people blame themselves for being stuck financially. They think they are lazy or unlucky. In reality, they were never taught how money actually works. You cannot win a game if you were never taught the rules. Understanding how banks use your money is not meant to scare you. It is meant to wake you up. Once you understand the system, you stop feeling confused. You stop guessing. You start asking better questions. The next time you deposit money into your bank account, remember this. Your money is not sleeping. It is working. It is just working for someone else. And once you understand that, you can start deciding how you want your money to work for you instead. In the next video, we're going to answer the natural follow-up question. If banks are using your savings to make money, then what should you do when you are broke? Should you save, or should you invest even with little money? If you want that explanation in simple language, make sure you are subscribed to PrecisionNet. And do not forget to answer the questions in the comments, because I read them and they help guide future videos. Because here at PrecisionNet, we do not just talk about money. We help you understand it.